Hello, traders. It is time for a live event. We haven't done one of these in a while, so anxious to kind of get started. We've got an FOMC meeting today. Harry, how are you doing? How you been?
Good to be back with you, Pete.
Yes, we've had not a lot to talk about in the market. It's been pretty dull actually the last few weeks. You've taken a little time off. I've taken some time off too, so that's been a good thing.
Yeah. Usually the dog days of summer come a little later, but this year they seem to have visited us early.
Yep, exactly. So, what are your thoughts heading into the FOMC statement today?
I mean, look, this is one of those where there's not going to be any surprises, right? I mean, it's pretty clear we're not going to have a rate cut, um, but obviously the proof is in the pudding, right? Where it's always about his presser. And this is one of those where they're going to parse every word he uses. Did he put an adverb in front of that aggressively or whatever? And really try to hone in on the number of rate cuts they think will be this year. Now, I think the market is pricing in between one and two rate cuts for this year, but there's going to be a lot of focus on what he says as opposed to what they're going to do, which is, they're not going to cut rates here, no matter what the current political environment wants them to. I don't think they're going to.
Yeah, I agree with that as well. I don't think anyone's expecting a rate cut. I think uh, the Donald was out there today saying Powell probably won't cut rates again. So
Well,
no
he
one's
also said, "What
expecting.
if I were, the chair? Maybe I could do that now." Okay.
Right. Yeah. Well, so what's been kind of surprising to me is that they are putting so much focus on inflation when inflation's actually been coming in. I know it's tariff related, but I'm also reading reports and seeing visual confirmation of storage containers in China just stacking up for the last few
Mhm.
months. And these guys are dumping their goods at 10 cents on the dollar just to get them out. And now the EU has a real problem with that, citing dumping. So I think that any kind of tariff increases for at least a few months are going to be offset by all of this price reduction and price dumping. So I'm not seeing any inflation. They've got it coming in. We're seeing a little bit of a weaker job scene over the course of the last 6 weeks. The Fed has cited weakness in their last beige book report.
Well, you might
So,
get some inflation on the oil prices, right, Pete? I mean, you might get some
yep,
on the gas prices. If this continues, certainly you'll get the short-term pop because they've already gone up. But if this continues or gets dragged out or something happens, that's a huge component of that number, right?
it is. And even on the whole oil scene, I see that as a demand issue because global economic conditions have been softening. Oil prices have been coming down, not because it's been produced so heavily, but because you're seeing a fall off in demand. And we'll see what happens in here. Central banks have been easing like mad, and the Fed remains very steadfast. So we'll see what they say today. Maybe they retain their hawkish tone. I think that they've got enough little seam in the weakness we've seen in the jobs report, and we've got inflation coming in to where maybe they can soften their rhetoric just a little bit. I view any kind of surprise today as probably coming on the upside, but I'm not looking for much of any change either.
Yeah, yeah, I agree with that. And then you and I are both pretty much in agreement on our longer. I mean, we're both longer term bearish right now. I'm of the opinion that the market is. I know this is sort of a non-technical. If you look at the technicals, there's no argument here. The technicals are bullish, except for that all important 600 SPY price point, right? Which is uh, clearly acting as both resistance and support. It's kind of like the line in the sand. Um, so there, that's on the technical side. On the non-technical side, I believe that this market is priced for perfection. I believe that even if you have all the tariffs called off and the pieces announced, you have some strong underlying global issues economically that is putting this market right now very, very overpriced, priced for absolute perfection down the line. It has the economy, both domestically and worldwide, would have to thread a needle in order for these numbers to make fundamental sense. So I do think there's a little bit of delusional exuberance in this market, even if you took away all the bullshit of the trade wars and the real wars. There still is this sort of denial of the real underlying economic global conditions.
Yeah, I completely agree with that. Valuations are extremely stretched. You're seeing our yields go up even when the Fed could possibly cut rates twice this year. What's that all about?
Right.
Again, it's a demand issue. We're having to refinance, and a supply issue. We're having to refinance $9 trillion of debt almost every year. So there's this constant supply of bonds coming to market. So interest rates, almost regardless of what the Fed's intentions are, continue to creep higher. And that's going to definitely crimp consumption. And yes, to your point, we're seeing all sorts of weakness in consumer sentiment, ISM manufacturing, ISM services. This morning or yesterday morning, the Empire Manufacturing. I mean, the list goes on and on. Initial jobless claims this morning, 248,000.
Mhm.
That's a relatively high number, and it's been at that level for the last few weeks. So the next jobs report that comes out, I think, is also going to be fairly weak.
And consumer personal debt is at an all not an all-time high, but is at, I think, like a 5-year high right now. Um, and you combine that with the jobless claims, and you can, when you have personal consumer debt high, and you have unemployment going up, that is a nasty combination. Then you start getting defaults. Then you start running into credit problems. Um, and that can be, a real market killer there too. So, what are we left with, right? We're left with price action as always. What's in front of us?
Yes, that's true. So even if we're going to get the correction, the danger of shorting prematurely is that the market continues to float higher on light volume, and being early is not a good thing. So what I'll be looking for, I've got the SPY chart up right now. What I'll be looking for over the course of the next few weeks is that I want to see that big, beautiful bill passed, because that, in my opinion, is one of the last big upside catalysts. Throw in a couple trade deals in there. That would be fine too. Those are potential catalysts. Put a little dovish Fed in there. No rate cut, but at least some dovish rhetoric. Give me all you got. I want to see what the remaining upside is, because I believe that as we start to get toward the middle of July, you're going to start to see some earnings warnings and some lower guidance. And with no rate cut, the market's going to get very nervous, as it always does in August and September. And then I think some of those weaker economic numbers are going to start showing up. And the premise behind that is also that you had all this front running, this front loaded demand ahead of all the tariffs. Well, that artificially propped up Q1 numbers. Now that inventory has to be worked off, and it's being worked off in Q2. So this is when those weaker economic numbers should start to surface. And that timeline and that timetable, I believe, sets up well for the middle of July or so. But get that big, beautiful bill the hell out of here. I want to get all the good news out, and then I'll be looking for long red candles down through the 100-day and 200-day moving average. That will be my sign that the selling pressure is starting to build.
So I did want to point out, because this is a trade that I did this morning, and I wonder your thoughts on it, Pete. I already closed it, but I shorted APP,
Love it.
and I shorted it at around 713. So right around 350, when it was at 355. And for people following, what I want you to look at is, so when you look at SPY at that particular point in time, you have SPY is going up, right? You have this nice SPY breaks VWAP early, VWAP's not really established that early, but still. And then it's just this nice upward movement. So I'm looking for a stock that's not playing along, right? A stock that's not going up. And I'm looking at app, and app obviously gaps down. And then as SPY's going up, app is holding flat, right? So it is not going for the ride on SPY. So I short it at 355, and I do put debit spread. So I basically I bought the 352.5 puts, sold the 347.5 puts expiring this Friday, and I did that for $1.90 debit. I did 15 contracts. Then you notice the moment you get that drop in SPY, right? The moment you start getting at around 8, 11:20ish, somewhere around there, to 11 o'clock, app just has no strength at all. Bam, down it goes. I have my order sitting there at $2.90 credit to buy back the put debit spread and close it out. And that order clicks in at 8:43 my time, so 11:43, right around where SPY breaks below 600. And I take $1 per contract profit on it. Very quick day trade, but it was a relative weak stock, textbook.
Beautiful trade. Before we even look at the daily here, I've had it up. Loved the daily chart. The daily chart, you can see how the stock has been drifting lower when the market has been flat to slightly higher. So this was the early tell. It gets below AVWAP-E. So you've already got support on a D1 basis. And to Harry's point, you've got this sluggish price action with the stock already showing weakness, can't rally with the market, can't get off the deck. Why is that? Sell, 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 sell. Sellers are out there pounding this stock. You get a little bit of weakness in the market, whoosh, there goes the stock. So beautiful trade. Love that one. And you've
Ever
got
since
some heavy volume.
ever since it was denied for, I think, now the fourth time entry to the S&P 500, uh, traders and institutions have been dropping the stock. Clearly, there's something going on that isn't being revealed there, because the financials and the price of this company and everything that it shows on its earnings qualifies it to be in the S&P 500, but it's been rejected every single time. So there's something there that obviously institutions are picking up on, and they're not happy with the company. Either way, you're right. I mean, that you see that in the daily chart, and then of course in today's price action. So that was just a example of a quick day trade that I took.
I like it. I'm going to highlight a bearish trade that I have right now. This is a bearish swing trade. It's one that can be entered now. And the symbol is SBUX. I have been bearish on this stock all year pretty much. So the play on SBUX and why I like it on the short side is you've got this nice sell-off in here, and you've got this what I would consider to be a meager bounce during this big market rally. So there's your big bounce that we had from April till today. What did the stock do? It barely was able to get off of the deck after a decent round of selling. And you can see how resistance is building at the 100-day and 200-day moving
Yeah,
average.
they're
Really can't,
merging too.
yeah, it can't get through that level. That's a hard ceiling on the stock. And so if I hover over the E, you'll see that earnings are on 729. When we buy options, we always like to span the earnings announcement. So what I'm going to be looking at is the August 15 $95 puts, and those are currently offered at 670. I would be buying those. And just because of my timeline and because I feel that I might be early right now on the whole market pullback scenario, again, my timeline is kind of middle to the back half of July when things might start to fall apart a little bit. I look at the July 18th $90 puts, and this is a diagonal spread. You can see that you can get that spread done for about $4.75. So, what happens if the stock goes down to $50? Well, I still stand to make 25 cents at least on that spread, because there are 5 points between the strike prices. and I'm paying $4.75 for it. And you might say, well, why would I want to do that for 25-cent possible upside? I'm doing it because I feel that these puts are going to expire worthless, and I'm going to be able to own the August puts at a very nice debit. And there's a possibility that the stock does start moving down. And if I get any kind of time decay in these and I start to see a market breakdown, I won't hesitate to reel in those July $90 puts. So that is a neutral to slightly bearish spread that I would be putting on right now.
I like that. I like it. And you've been on that Starbucks bearish kick since the beginning of the year. Um,
It's about
and you'd be lying if you didn't say
$115.
there wasn't some personal hatred going on there.
I just, if the economy is starting to soften, I don't see people buying $7 cups of coffee. I see them cutting back all of their consumption across the board. And that dovetails into another stock that I'll let you talk a little bit about because I happen to agree with it. Apple has been a favorite short of yours.
It has. Uh, Look, all of the potential positive catalysts on Apple are kind of now out of the way. There's always the possibility they'll announce something, but they had their WWDC event. People were disappointed with that. They have, been seen as behind the curve. But more importantly, if you look at the daily chart, you're looking at a stock that is absolutely struggling with getting above the 50 SMA. It's, while if you compare it to the market in the same point in time, Apple is showing absolutely no strength at all. It's barely even. I mean, you have very small candles. There's not much volume going into it, not much buying here, and it cannot get through these resistance points. It can't get through the 201.79, and it can't get through the 200, right? 200 just always being a round number level there. So I'm looking at this stock, and without a catalyst, and earnings are over for a while, so you're not going to have any sympathy catalyst with Google or Microsoft or anything. So without a substantial breaking news catalyst, I just see this stock drifting lower. Yeah, you might have days like today where it's up, but it's not particularly strong. I shorted it this morning. I'm up on that short right now. But if things go as it continues to go, and particularly if we get a drop in the market, I think Apple isn't going to have any strength whatsoever to withstand that.
I'm going to address one of the questions. It is regarding one of Dave's statements that process is greater than P&L. What's our experience been with it? In essence, the statement is that you go through your decision making process. And if you refine that process, you're going to be getting into good trades. You're going to be making good decisions that might not always bear out in your P&L, but over time, if you keep doing that, it is going to bear really good results. And right now, when you have a very sideways market like this, it's particularly the case. So you really need to focus on the quality of your picks, and you need to keep your trade count down and your size down right now.
Yeah, I agree. I mean, look, my problem is I sit down, I look at the news, anything that is either stock related, sector related, industry related, or just general news overall. Right? Some are combined. So the war between Israel and Iran is obviously going to affect oil stocks, right? So if I am looking at oil stocks, I might look at, and I went long on CNX, but the point is, I would not have gone long on CNX if it did not also have a good daily chart, right? So that's something I would have gone long on anyway, looking at the daily chart. But because it's an oil stock, I did well on that. I bought 3,000 shares and made around 80 cents per share on that trade. I held it for I think a week or so. But it had a good daily chart. So my process is just combining all of those things together and making sure every trade, now not every trade's going to be a winner, right? But making sure every trade follows that process and is justifiable. That if Pete or Dave or anybody in the room or anybody comes up to me, so why the hell did you take that trade? Even if the trade didn't work out, I'd be able to point to and say, because of this, 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 and this. And as long as you have that, as long as you have a very clear justification behind it, not all trades are going to work out, but you're putting the odds in your favor by sticking to a good process. I do want to, Pete, someone said, I love watching these perma bears get railed as the market grinds up. Pete and I are anything but perma bears, number one.
Oh, no.
90% of the time, Pete and I are bullish. 90% of the time. Markets are generally bullish. 90% of the time we are. But I'm a taxonomist, which means I like to classify everything. Let's look at what the term perma bear gets thrown around a lot. There are obviously the perma bears out there that are apocalyptic perma bears. They just believe everything's going to fall apart at some point and everyone's going to get screwed. And you know what? They're going to be right once every 15 years. But because of everything they lost for the 14 years where they were saying everything's going to fall apart, it doesn't matter, right? They got the crash 15 years later. They predicted 1 out of every 1,000. So there's those perma bears, and you can pretty much ignore them. They're always going to say everything's going to fall apart. Then you have your kind of long-term bearish, I don't like what I'm seeing, but they're generally negative. And then you have where Pete and I are right now. We're normally bullish on the market. Most of our trades and posts have been bullish. If you go back and look at Pete and I's videos from the last year, I'd say about 80% of our picks were bullish picks. But there are times where we go, hey, I think right now we're overextended. I think the economic situations, I think our read of the current news is that we are going to get a pullback. Now, you can never time those pullbacks. You can never say it's going to happen in a week or two, but just that I'm probably not going to swing many longs. I'm probably going to focus more on the short side, like I did this morning with Am. That's what we're doing right now. I mean, what do you think, Pete?
I completely agree that I am normally very, very bullish. That's been the side that I've always erred on for good reason because of the 100-year market trend. So, that's how I've been for the last 18 months until really December is when I started to see some warning signs, global warning signs, and those started to manifest. Those started to accelerate. Central banks were cognizant of them. They started to cut interest rates to no avail. They haven't stimulated economic growth. And that is coming to the US. It's just a matter of time. Our market has been more stubborn, more resilient, if you will. But I feel that it's coming, and I'm going to be patiently waiting for this breakdown. I had a question. Do I envision us testing the 200-day moving average? If what I feel is going to happens, we are going to obliterate the 200-day moving average, and that will be where I start taking starter bearish positions and adding aggressively through the 50-day and through ABWAPQ. So yeah, you start scaling in and you add on confirmation. So you don't guess, you wait for technical confirmation.
And let's point out, Pete, that if you go to November, you know where SPY was in November? 599.85. You know where it is right now? 599.85. That is bearish because if you consider that the average SPY gain a year, right, lately, let's say it's been around 9% or something, 9-10%. Well, that's 8 months of no gain. So where should have SPY been right now from November to now if it just followed its normal bullish upward trend? SPY should be at around 640 right now if it just continued following the normal market upward trend. But SPY is exactly where it was in last November. That's now 8 months of no movement. If you bought the index back in November, you have made no money. That is bearish. That is not a bullish market. That is a bearish sign. So yeah, we not only have been bearish and waiting for the pullback, but we've also been correct in that assessment that the market has gone nowhere where it should have gone up 5 to 7% in that period of time.
Yeah, very newsy market. So you didn't know to what degree, I didn't know to what degree this drop was tariff related, because I felt that at least part of it was due to the global macro conditions. Wasn't. It was a big tariff scare and a big rebound when the tariffs got postponed. So now we're just kind of in wait and see mode, but we were short all in here, down in here. I was selling puts aggressively, looking for this bounce. Right in here, I started to get bearish. So yeah, I've been wrong for this part of the move right in here, but in total, it's been a good call for this year. So now we just wait and see if the next move, which I believe is lower, manifests, and then we trade accordingly. Now, because of my bearish bias, I am not going to be out there getting long as hell. I can't. I don't have the staying power for it because of my market opinion. And if your market opinion is we're go bullish as hell, we're going to go blow through that all-time high and keep going, then you should be long. And that's, you trade what your forecast is and your confidence in that forecast.
Okay. And look,
How do you
I
just
get it, because if you're not a trader and you're not someone who studies the economic world or conditions, you pretty much just have that cursory knowledge that markets go up. So anyone out there saying we're going to drop, it seems like they're running counter to the very surface level knowledge that you might have about how markets work. And yes, you know what? Someone who's a bull, a perma bull, they're always going to be right in the long term. Taking it out the possibility of an apocalyptic event. And at the moment, this market might not even drop with that. But taking that out, yeah, eventually you're going to be right. Give yourself a 10, 15-year timeline, and yeah, the market will go up. We're traders, so we look at the daily, we look at the weekly. We're trying to figure out what's going to happen based on the price action, day to day, week to week. Can I swing this for a couple of days, a few weeks out? That is what we do. If you want to be a perma bull about things, go be an investor.
Yeah, your APP trade today was a classic example, and I'm not having my ass handed to me. I'm not having my head handed to me. I had a great week last week, and so I'm just kind of waiting and seeing. And there are opportunities every day on both sides of the market right now because the market's not going anywhere. So weak stocks are falling and strong stocks are rallying. I will have a bullish pick for you, neutral to bullish pick for you as well. Um, Let me get to one question real quick here. How do you decide if you're going to use the 8 EMA or the 15 EMA? Well, you decide like you would for any other technical indicator. You investigate it, you use it, you gain confidence in one versus the other, and then you make a determination which one suits your trading style better. I use an 8. I believe Harry uses a 15, but I
Mhm.
also use mine more for overbought conditions. I want to see the underlying stay tight to that EMA 8. And if that EMA 8 starts to distance itself from the stock price, then I feel like it's overextended and I don't want to chase. I'm better off setting alerts and waiting for a pullback and then entering that trade. But I don't use it like, oh my God, the stock bounced off the 8 EMA. That's a clear sign that it's going higher. I don't use it like that. That I do use the longer term moving averages for that.
Yeah, I agree. I use the 15, like you said. Um, Interesting question here. The dollar is down year to date. Yes, it is. It's down actually quite a bit. That has some relevance on SPY price in addition to being nominally flat. Do you take that into consideration? And if so, how? Well, to answer your question, yes, I do take it into account. It's not in isolation, right? But obviously, the dollar being way down year to date matters because SPY is priced nominally in dollars. So when the dollar weakens, risk assets like equities, they float higher in dollar terms. it's like inflating a balloon, right? Your asset prices can rise even if the intrinsic value hasn't changed. Um, but a weaker dollar tends to boost earnings since overseas revenue converts back into more dollars. That's bullish. Inflation adjusted thinking, if SPY is flat but the dollar is down 5-6%, that's a real loss, right? So if you care about real returns, not the nominal, then yeah, you factor that into sizing risk reward. Um, but it is, look, it's a macro tailwind, but it's not in a vacuum. So uh, if what we think happens is going to happen, you're going to start seeing the dollar go up, and that you're going to see the market lose the tailwind. But that is one of the things, and you kind of pointed out, one of the things that has been propping up this market is that weak dollar. And, you know, that can prop up a market for a long time, which it has. What do you have any thoughts on the dollar? Do you pay attention to it there, Pete?
I don't watch the dollar as much as I do the bond market, and the bonds tend to also have an implied dollar correlation to it. So, um, yeah, I don't focus on it as much. I'm aware of what it's doing, but I don't watch it tick for tick. I do watch bonds more, the TLT in particular, and I
Yeah.
watch VXX and volatility as my guides to what the market might be doing.
If I had to choose one thing, though, I would be a TLT. I 100% with you there. Um, I mean, someone asked, we've both been trading a long time, and they had a question about our psychology. That's a whole other session. But do we ever feel frustrated or succumb to mental issues when trading as pros? Is it possible to actually detach yourself from outcomes, just follow trades? So, Pete, what do you think? Do you succumb to mental frustrations or issues?
My frustration as a trader tends to be around certain periods of the year when nothing happens. You can give me the volatility that we saw 2 months ago, and I will just love the heck out of that. The last 2, 3 weeks, that's when I start. It's not even a frustration thing. It's just like, oh, Jesus, can we just break out of this dang doldrum here and kind of get on with it? So, it's not something, it just have to be patient. You just have to wait for your opportunities to set up. You have to know that they are going to come. When you get a really low probability inside day, the temptation is to just fold up tent and say, well, I just don't think I'll be trading today. But those are the times when you need to set alerts. You need to be ready so that if you do get a move, and there are times when all of a sudden you get this crappy start to the day, and 2 or 3 hours into the trading session, things actually start to move. And the next thing you know it, you're having a really good trading session. And you think, well, gosh, I'm glad I didn't just throw in the towel. So just stick with it and grind it out. Sometimes trading can be really, really exciting, and there's lots to trade, and there's a lot of money to be made. And that's not going to happen all the time. You're going to have feast and famine. So mentally prepare yourself that this is going to be cyclical. Your returns are going to be cyclical. What are your thoughts on that?
I don't really get frustrated with individual trades that much because you know, the solution to that is really the idea of setting up your trading as a business, right? So when you do that, when you set your trading up as a business, what you're looking at is my monthly return coming in on average within one standard deviation of that average where it's supposed to. So that's what I focus on. If I lose a trade bad or I do great on a trade, I know at the end of the month it's going to balance out and I'm going to hit my goals. How do I know that? Because I've been hitting my goals month after month after month. If ever a situation comes where I don't really hit my goals, then I'm gonna have to look into why. But so I don't focus on any one trade too much. I mean, obviously, every now and then a trade like SMCI last year or a year and a half ago that bugged the hell out of me. But in general, no. What tends to get me the better of me is, no surprise, I'm a little bit arrogant, and I believe I can debate any economist into the ground. In fact, one of my great hobbies is calling up JPM and just knocking their dick in the dirt. Just bashing them around because uh, they're so frequently wrong and don't know what the hell they're doing. And it's fun to have them stammer, even when I have some of their economists on the phone. Um, so when I'm looking at something and I'm looking at this resilient market, and I'm thinking, is it going to take a fucking mushroom cloud to drop it? What the hell? That's where my emotions sometimes can get the better of me. My impatience of, look, I know I'm looking at what's happening in China. I'm looking at what's happening on the consumer level and the debt level. I'm looking at what these earnings are and what people put in their guidance for Q2 on these larger companies. And yeah, at that point, I'm waiting for the market to catch up with reality. And I can get a bit emotionally frustrated with that. But I balance it out by going, okay, I have my long term SPY puts over there, but I'm going to mitigate that by taking, the occasional long. I'm going to I'm going to play the price action for the day. I'm going to make sure I cover my nut on day trades as I wait for reality to match up with what the market is doing. So yeah, that's where I'll get frustrated.
And when you get into these lulls like this, you have to vary the type of trading that you do. I'm primarily a directional trader, but when the market starts to have these tiny bodied candles like we're seeing on light volume, it's very typical of June, July, even the beginning of August. Well, that's when you can go out and you can sell some premium, which last week in the chat room sold puts on OKLO, sold puts on UPST, sold puts on QUBT. Those stocks were all really rich in implied volatility because they've been movers. And if I took a look at a chart and thought about an area that I'd like to buy that stock at a particular level, QUBT, when I bring that up, just to give you an example, I sold the $15 puts right in here for 40 cents with a week and a half, maybe 2 weeks left till expiration. It's just a gorgeous return. And I'm way out of the money. I'm like 4 points out of the money. When the market's doing nothing and it's not likely to do anything, and you've got a hot stock like this with high option implied volatilities, it's a good trade. So I might as well show you the long that I am going to highlight in today's video. CRWV, very, very hot stock, high option implied volatilities. So the stock is at 170. I can go all the way down below AVWAP-E to $115. I can go out to the July expiration and I can sell the 115, 110 bullish put spread, and I can do that for a credit of $1. 80-cent bid offered at 120. You put your dollar out there, you don't get filled today, maybe you'll get filled tomorrow. So that trade's going to span roughly a month. If it works out properly, you'll make a 25% return based on the margin that you have to put up. And I'm not expecting any kind of market sell off until perhaps middle of July, but more toward the end of July when Q2 earnings unfolds. This stock has a full head of steam, which tells me that lots of buyers, lots of institutions are in there because we have heavy volume. This is not a one-day rally. This has been a sustained rally on heavy volume. It's a trade that I would do, and I wouldn't think twice about it.
Well, I just took $1.24 per share profit on Upstart. I had 1,500 shares there. Took that trade this morning. Profit per share. So that was a nice trade from this morning. UPST.
Yep, that's the one that I looked at here. I saw this horizontal was resistance, now support, these major moving averages right in this area. That's what gave me the confidence to sell the $55 puts. I think I sold them for 75 cents a few days ago on the notion that if I could buy the stock at $54.25 via assignment, would I do it? The answer was yes. So I did the trade, generated some nice income.
There we go. I have a real Anthony Bourdain vibe. Hopefully, I don't wind up in a hotel room the way he did. But thanks. I think. Um, Opinion on BA leap puts due to the news. I'd avoid fucking Boeing puts, calls, anything the way you would avoid a guy named Fat Joe with tattoos trying to sell you a Vicodin in an alley. Don't do it. Don't go near it. Don't touch it. Boeing is the worst stock because the damn thing is it just it will always do the opposite. And then when you think, fine, I'm going to do the opposite of what I'm going to opposite do, it'll do the opposite of that. Don't touch it. The stock is possessed. I'm convinced of that. Get away from it. Run from it. Don't put puts on
That is on Harry's do not trade blacklist.
Oh God.
I
That's
did
a
have a
mess.
question. Sorry, I did have a question on and back to Boeing. It's newsy, a door flies off, a plane crashes, somebody cancels an order. Oh, there's a new order. It's extremely newsy. So Harry's mentioned this before. Stocks that are super newsy like that, you can throw the technicals out the window because the technicals can look great 1 second and they change instantly on a news event.
Yeah, not
Uh,
good. Doesn't
one
help that
question.
flying back the other day when I was flying back, we're descending into Burbank, and then all of a sudden we stop descending, shoot up really fast, and then the pilot's just like, "Sorry about that. There was another plane in our way, and we had to move."
Oh,
That's reassuring.
wow.
That's great.
I I did have a question earlier. Is there anything outside of this breakdown below these two major moving averages that would get me to short before that happens? And the answer is yeah, there is actually one pattern and only one pattern. If we get the big, beautiful bill and we gap up to the all time high and that thing gets smacked down like Chris Rock at the Oscars, we have a long red bearish engulfing candle off of that high. Yeah, I would short that and I would carry that because that tells me that the market was waiting for that news. It's a sell the news event and that sellers aggressively knock that baby down. And then we would see follow through selling on the backside. But that is the only exception.
Yeah, I agree with that. I think if we get that, for me, I like the fact that we can't seem to get through 600 on SPY here. And so, but we're not looking at like an aggressive smackdown off of it either. I don't know. I mean, I'm a little bit more bearish. The longer we stay below 600, the more bearish in the short term I become.
Yes, and when you do test these major moving averages with those long candles, you don't want to poke around and spend time at the major moving averages. You need to obliterate them convincingly and then spend time below them because that shows you that those sellers are firmly in place and that that resistance is starting to take hold. And then you can expect your next leg down.
We have a question here. I know we all know no trader is perfect trader. If there is, then they're lying to you. That much is true, or trying to take your money for a bunch of crap. How does the type of things you learn change or get deeper as you've been a pro for so long? Is it mainly knowledge about yourselves, where you've probably seen it all? Um, I mean, for me, there's two different things, right? You have the mindset part of trading, and you have the knowledge part of trading. After a certain point, you got the knowledge part of trading pretty much down. You tried every method, you've done every cross, every indicator, and you've settled in, as Pete and I have, and Pete discovered and built a whole community off of on on the method that is most likely to produce profitable, consistently profitable results, right? And so, yes, we always entertain new things, and new things come along. AVWAP, for example, that had a lot of credence that Pete added into the mix. Um, but that pretty much saying, so what you have then is both mindset and then generalized knowledge. Uh, what has become interesting in the past 4 or 5 years, certainly since the pandemic, really, and CPI and all that, is before that, traders didn't really need to have it. It's never a bad thing to have, but didn't need to have an extensive economic background or knowledge base, right? You didn't even need to know the CPI or the employment numbers or anything other than there's some market moving events that happen and whatever. But certainly, if you asked me 5 years ago, what would be the effect of a tariff increase here and interest rates there and unemployment there? My answer today is going to be a lot more well-rounded than it was then. So I've certainly increased my knowledge base there. And then mindset wise is the reliance on this is my monthly goal, these are my monthly returns, and not focusing too much on any individual trade.
Yeah, just to add to that, kind of the eye opener for me was 2008. I had never been through a financial crisis that really felt like the bottom could fall out. And so that was a real learning experience for me. I hadn't seen a bear market like that before. Most people haven't seen one. And so I learned a lot from that. And I definitely learned the warning signs to watch for ahead of time. It's something that smolders for a very long period of time. And those warning signs were there in 2007. You shorted in 2007, you got your ass handed to you. You're ultimately right, but you ran out of money. And so
Hmm.
that's why you have to wait for those technicals. You have to wait for those breakdowns. And you might look a little bit foolish, like right now, us saying that we're bearish. So you have to be prepared to handle that mentally and to stick to your guns and wait for confirmation. But yeah, there's not a lot that I can say that I've really learned recently. The one thing I am noticing, just because I have my face in this, is that from 2010 to 2020, it was pretty much go-go market. It was a nice big bullish market with your normal dips, your normal pullbacks that you could buy. No real news impacting the market. But now in the last 5 years, we've had two bear markets, and I think we could have a third one.
Hmm.
That's very unusual. And if you start to see that price action on a daily chart, all of a sudden you've got deeper, more prolonged dips. That's not a good sign. That's a sign of selling pressure. So,
I think
yeah,
when you say about 2008, Pete, I love the movie The Big Short. I think it's probably the best financial movie out there. And that's a perfect example where the market is uh, doing one thing in face of reality. And you perfectly encapsulated by the frustration of the Michael Burry character saying, "This doesn't make any sense. Why is it still going up? Why is it still going? Doesn't make any sense." The market will do everything it can to protect itself before finally succumbing to a reality. And that's why you get these crashes, right? These crashes don't occur where you get these small incremental drops as you slowly seep away and you lose 20%. No, you get these huge dam breaks crashes. And what that is, it's not like the problem happened on that day. The problem existed well before that day, but the market puts itself in a state of denial and tries to stave off the obvious for as long as it possibly can until finally the dam breaks and then it drops. That's why you go down, you take the elevator down and the stairs up. And so, that's why you can have this resilient market now, despite evidence to the contrary everywhere else.
yes, and money has to go somewhere, and there's an awful lot of it. There's a lot more money right now than there was 5 years ago, just because of all the money printing globally. So that also has a tendency to keep markets afloat much longer. And just the way that the whole credit crisis unfolded, everything gets discounted. It's like, oh, yeah, there's this little countrywide, it's nothing. You don't pay any attention to that. And then, there's another little bank, and then there's another little one months later. And, things manifest, and then when you hit that breaking point, everything collapses very, very quickly. So I don't know that we're going to see anything like that. This is in the context of what have you learned and what have you seen, in the last 10 years that kind of changed the way that you trade, and what was different. Are you learning anything new? Well, that was definitely a new experience for me, and the fear that came along with it was unprecedented. And then the whipsaws that you would get when the Fed would come out on the eve of options expiration and announce a possible rate cut or TARP. I mean, it was just crazy. So bears did not make money easily either. They were taken behind the shed many times.
There's a quick funny story. Someone's a great casting margin call. So my former boss or owner of my company uh, was the producer of Margin Call, and this guy was a basically a rich kid, right? His father gave him $200 million to go play producer in Hollywood, and he got lucky. The first movie he made was Margin Call. Everything after that was total crap. Um, and he had funded my company, and I had created these models to predict opening weekend box office off of certain elements and so on. Anyway, he was also a raging fentanyl addict. This guy would suck on fentanyl lollipops all day long, and Amazon's coming in and they want to buy the company. Now, at this point, I owned 25% of the company, and they're coming in with an offer of $25 million for the company, right? So, here I stand to make $6.25 million off that deal. Great, take it, go with God. And they come in and we have the meeting and everything else, and he comes in just whacked out of his mind, misses his chair, falls to the floor. We help him into his chair, drools all over the table. Amazon winds up walking out of the meeting, and we lose the deal. So, Margin Call, that movie, brings up great memories. Thanks.
That is a hilarious story. Fentanyl lollipops.
Yeah.
Uh, I did have a question. Given all the moving pieces and everything, is there a way to devise a mechanical trading system? I've spent hundreds of thousands of dollars trying to figure this out over the last 20 years. And my conclusion is nothing beats what I can do uh, manually and evaluating the market. And before I'm going to let a computer decide that I need to enter or exit a trade, I'm going to want to evaluate it anyway because things have a tendency to go haywire. So the answer is no, there's not a mechanical system that I've been able to find. If you're Goldman Sachs, then yes, you probably have all the programmers that you need and the billions of dollars that you can throw into it. And by the way, you also are an executing broker, so you get to see all of the order flow that's coming to market. So, could I possibly devise something if I had that information? It would be a heck of a lot easier, I'll tell you that. But unfortunately, there is no way to just devise an automatic cash machine that buys and sells.
DJ Artificial might have taken my pick of the week here. Um, I love this trade. I think he's or she, I'm assuming he is right on it. Adobe Short. I mean, that is a beautiful daily chart for a short. You get this breakdown on June 13th, right below the 100, breaks right through. It then tries meekly to try to get above the 100, can't do it. Then yesterday, it breaks down below the 50. Today is its chance. Bullish market, market's up, chance to break back above the 50 and keep that established as support. Cannot do it. Breaks and confirms below the 50 and is now weak as hell. I love the Adobe short. It's a great pick. It's a great trade, I think. How I would play it is, maybe wait to the end of the FOMC, perhaps, to be cautious about it. But you can do a 380, 375 put debit spread right now for $1.70, $1.75. That's a good trade in my mind. In fact, I'll probably put that on right now. $1.70. I'll do that. 15 contracts. I'll try to grab it for $1.75. There we go. And done. Got it. So short
Love
Adobe.
that. Love that one too. It was on heavy selling. I took a look at it and went, oh, what was the earnings report like? So the knock on the earnings report was they exceeded earnings estimates, but they didn't have a growth driver for the rest of the year, was what the analysts were saying, which basically meant, where's your AI? You had AI in there anywhere, we'd rally the hell out of this stock. We didn't have any AI in there. So technically, you can see the exact things that Harry had just mentioned. I like it too. I think this is a really sound short.
Do you have a pick?
Well, mine is, I'm going to do the two spreads that I had suggested, the SBUX diagonal I like on the bearish side, and then I also like the CRWV bullish put spread. Those are two trades that I would do.
I like that bullish put spread. I wasn't even with a CoreWeave had options going, but that's a great one. A lot of you don't remember. A lot of you weren't here, so you couldn't remember it. But back in, I think when was it, Pete? 2022, where Pete did around 350 bullish put spreads that year. It was the year of bullish put spreads, and something like a 92% success rate on those bullish put spreads. You could just come in and get 3 or 4 good bullish put spreads a week, easy, and posting them all the time. That it was a great market for that trade, and now when you have the premiums the way they are, you're getting some good ones. So that's a great one.
Yeah, we were selling bullish put spreads coming out of the COVID crash and just kept on doing it. And the option implied volatility stayed high because, again, no one had been through a pandemic. Which of us has been through a pandemic before? Well, now all of us have. But heading into 2020, no one had been, especially not a global one where everything shuts down. Well, now what do? Well, if you got high option implied volatilities and very sound companies, especially tech companies, were less impacted by COVID. It was kind of, I don't want to say easy money because trading is never easy money, but it was a good risk reward setup.
Oh, what do you think, Pete, of SMCI? Certainly looks good, dare I say. I would probably put an alert around 46, which is the top end of that trend line coming right off of 521. And I still like RKLB. I like the Rocket Lab. I think that's a good chart too.
Well, you've got about 38.50. You might not get enough premium for that. I was just going to see if there's a bullish put spread on that one. 8.5 is the expiration, or the earnings date. So 8.5, you can go out away. I'm just going to take a look and see if there's any premium and a bullish put spread that goes down to maybe the 40 or the $38 strike price. Probably not. It's. But you know what? What you could do is those option premiums they're rich because of the nature of the stock. So in July, July normal expiration, you sell the $38 puts for 85 cents on the notion that you're going to be buying the stock below all of these major moving averages. So you got AVWAP-E, you got horizontal support, you've got the 200-day, 100-day, and 50-day all converging around $38. Would I buy the stock down there if I had a chance to? Yes, I would. Then this is a nice little trade where you can sell some premium over the course of the next 4 or 5 weeks, make some money, and not sweat it.
Absolutely. Um, I got like this drop on Apple here with the market dropping a bit, but Apple's really starting to bottom out. Adobe dropping with that as well. Very nice. Meanwhile, Rocket Lab and FMCI continues to power up uh, despite the drop. So um, the Reddit question: what was his plan for that trade? Uh, I got out of the Reddit trade. I obviously looking at today, I shouldn't have. I had the SMA 100 as my line in the sand. No, I don't use the hard stops. There's still mental stops, but that was my line in the sand there. And it broke below that. I had a weak market. Reddit was breaking below that. I had no intention of swinging along overnight with the market so weak, with the situation being what it was. So I got out of the trade. I took the loss. Obviously, looking at it today, it would have been great to hold it, but I still feel I made the right decision getting out with the break of the SMA and with the way the market was. So I would do the same thing, even though it didn't work out. It was the right decision at the time.
And I like Reddit. I like Reddit. I liked it when it had this breakout back in November 1st, 2024. This is where I said I've seen this pattern, horizontal breakout on a IPO. This is a social media stock. Market was really strong, had a big run all the way in here. And I said, yeah, I think this is a stock you can salt away for a long period of time. And you can see that the stock is still above that previous level, pulled back, tested the bid. Now it looks like it's poised to move higher. So longer term, I like Reddit.
Yep. Yeah, you always have actually. You always have. Remember that. Hey, Pete, question here? What percent of the days do you think in a year are trend days? 25%, 30, less?
Yeah, I think you get about one decent S&P trading day a week, which tends to be a trend day. So about 20% of the time.
Yeah, that sounds about right. 20%. I mean, obviously, there's some volatile times where you'll get a higher percentage of it. Um, a lot of time, most of the time, you're going to see us say, low probability trading environment. And really, what that means is you're not going to get the tailwind, right? You're not going to get whatever tailwind SPY is going to give you, whether it's trending down or trending up. So if you got a bearish trend day and you're shorting, not only do you have the weakness of the stock, institutions are selling it, whatever, but you also have the drag of the market. All what that really just means is that you need a stock to bear all of the weight of your trade. And so you're going to need a stock that is really relatively weak. Market is not moving. It's up maybe $1 or $2 like today, but it's not really going anywhere. But that stock is just like App was, right? Like App was just dropping. It did not even need the tailwind. It had major selling going on. That's the type of trade you need on a low probability trading environment day.
All right, I think we've gotten to all the questions. You've done a trade, and you've got one highlighted. I highlighted two trades, and it's kind of time to get ready for Jerome and see
Yeah.
what he's going to tell us. I will mention something. This is a very unique week. I can't recall this setup ever. In fact, I'm sure it hasn't happened because Juneteenth is new. This is a new holiday. It's only a few years old. And so typically you're going to get this lull. It's sometimes the FOMC statement coincides with triple witching. That's usually the chemistry, like the perfect storm for a really volatile day somewhere within that week. Well,
Mm-hmm.
this week, if you took a look at the calendar and you went, oh, wait a minute, I've got FOMC on Wednesday, oftentimes the big reaction, the real move comes Thursday. It's not in the last 2 hours of trading Wednesday. Yeah, you're going to get an initial move, but it's that overnight reaction and that move Thursday that means a lot. Well, this year, you're not going to get that. And because Thursday is a holiday, and so any triple witching influence, which typically when the market starts to move in a particular direction in any given day during that triple witching week, that's when you can get a trend day based on how the institutions unwind their positions. Well, they're not going to wait until Friday. So, okay, now you kind of took Friday out of the equation, you took Thursday out of the equation. Now you've got Wednesday, which is the actual announcement. It's probably not going to get a lot of volume there or volatility either. So it really, this holiday really muddled up what could have been an excellent trading week.
Yeah, it really kind of did. I keep forgetting that tomorrow the market's closed, which is
I
just
know.
really odd. A, that it's closed in the middle of the week, period. But that, yeah, it's closed after the FOMC triple witching. It just kind of puts a damper in things. Um, and then God knows what kind of news environment we'll have when we come back on Friday. So makes it tough, certainly, to swing anything.
Yep. And we'll see, from my perspective, if the tone is more dovish, and I don't feel that that is likely. It could happen. It's possible, but I don't think it's likely. There could be some call sellers up here around the 605 level on SPY. Any surprise and any kind of squeeze, I think, would favor the upside on the announcement today. So, there could be some call sellers up there that have to buy back their calls, and you could get a little bit of upward movement off of it. So, I would watch for that. But typically, you're best off not trading the FOMC reaction. Harry's got his
All
hood
right.
on, so I think that means he's either smoking or he's going to be smoking very soon.
About to, yes. You know me
Harry,
well.
fun doing the event with you. Hope all of you learned something and enjoyed it. Please leave your comments, and we'll try and do another one soon. Trade well, everybody. Thanks, Harry.
Bye bye.